please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. The markets turned around and how from the low point, and the best example now is PSU banks. Just pull out the intraday chart on some of these now. Most of them started at the low point of the day, now turning to the high point of the day. That's the Nifty PSU bank. It's up only 0.1% because obviously the move from the low point has been rather stunning. Just pull out intraday chart, for example. Now Allahabad Bank, you have Union Bank making a move to the high point of the day. Just pull out others as well. That's Allahabad, that's Union turning into the green. Pull out Canara Bank, that's also making a bit of an effort to move back to the green, still in the red, but these are stocks which are surging right now. Good time to invite our next guest. Sunil Singhania, CFA and founder of Abakkus Asset Manager, is with us from the sidelines of the CFA Society, India's third wealth management conference. Sunil, good morning. A lot of wealth being generated in equities to manage. What is this conference about, and your own thoughts?
So I think in line with the CFA's global thought process about spreading literacy across financial markets, I think obviously we started with the India Investment Conference some 7-8 years back, and for the last 3 years we have been organizing this wealth management conference. Because finally in India, managing wealth is becoming more professional. There are a lot of family offices. People are looking not only at real estate and gold and jewelry, but also other facets of wealth management, whether it be equities, fixed income, and structured products. So I think all in all, it promises to be a very interesting session. And we have an excellent lineup of speakers right from morning till the end of the day. So hopefully the 500 plus participants who have registered and are attending will have something useful to take home.
Sunil, hi, good morning. Well, we're waiting to hear what the takeaways from that conference are. But what has the sentiment been so far with respect to domestic retail money? A couple of months back, we were discussing how the entire equity cult has, changed. I mean, there's so much SIP money coming in. You think that trend continues now? And do you see a lot more coming into the domestic retail fraternity?
So, Sonia, for the last month and a half, I've been traveling across the country, meeting investors for my new fund, the Abakkus Growth Fund. Though I would honestly say that my focus has been on the HNI category. One thing I can say is that this 1.5 months has been a revelation for me. I think the kind of wealth which is there in India is like very, very surprising. And another aspect of it is that, the markets are at an all-time high, but maybe the exposure to equity is still very, very small. In fact, there are more people willing to or waiting for the markets to correct to invest rather than the other way around. So I think, the clear move from physical assets to financial assets and, investors looking at that is very, very visible. And I think as we move ahead, that is only going to get stronger and stronger. So as far as flows are concerned, I've only got more confident in the last 1.5 months than I was earlier.
Good morning, Sunil. You may have a litany of great speakers at the CFA event, but we also have a litany of good speakers here. We have Sunil Singhania with us. Well, I wanted to know if really fund management is...
You're very kind to me.
If fund management is that money-making a business as it was, there are lots of SEBI rules coming in and looks like more will follow. Now, do you think that, people may go the ETF way? So many funds have gotten listed. And interestingly, some of them are even, some of their own employees are selling off from, taking profit in those funds. So is fund management listed stocks a great idea?
See, I think, you have to understand that investments are to create wealth. And at some point of time, every investor has a right to, diversify out of the core wealth they have created over so much of hard work. And people have different aspirations in life also. Someone would be wanting to buy a new house and so on and so forth. So I don't read too much into this day-to-day analysis of someone selling 1 crore, 2 crores worth of stock. And I think I think we should get away from that. Regarding your other question, very clearly, as I mentioned earlier, there is this move towards moving away from physical savings to financial savings. And we have only started off. I would say, the total fund management / wealth management industry in India is not even $400 billion. For an economy size of $2.5 trillion, which is slated to go to $6 and $7 trillion over the next 10 years. So I think this industry is only going to grow. Yes, there would be challenges in terms of the fee structure. Particularly, my view is that the large cap funds would find it very tough to outperform the benchmark, and therefore the fee structure there definitely would compress. But having said that, I think the amount of assets which can come into this industry can surprise for a long, long time. And we have seen that in other parts of the world. So why would it not happen in India? So I don't want to comment on individual stocks or the valuation at this point of time. But I would say that asset management / wealth management / life insurance companies, they would have a great future in India.
Okay. So, Sunil, in that case, the kind of inflows that we saw last year, this year, of course, there's been a bit of a doubt on whether after seeing the brutal correction in mid-caps, the first time retail investors would get jittery. You reckon incrementally we can keep on churning these kind of numbers in domestic flows? And, of course, you answered that in part to Sonia's question, but could that lead to further re-rating of our market?
So 2-3 aspects to it. One is, you mentioned a very strong adjective, brutal. And to some aspect, it might be right if you take a point-to-point, correction. Say in the last 6 months, yes, mid-caps and small-caps have fallen a lot. But if you take a one-year scenario, I think a lot of good small-cap funds are returning as much as the Nifty and much better than the large-cap funds. So it would be wrong to say that over a one-year period, they have underperformed dramatically. Second is, my view is that India has grown because of entrepreneurship. And that should continue as we move forward. There are so many new sectors coming up, new entrepreneurs coming up. Risk capital through venture funds, through private equity funds is available much more easier than it was earlier. And I would say that in a growing economy like India, which is slated to grow from 2.5 to 7, as I mentioned earlier, there would be a lot of opportunities for mid and small caps, even as we move forward. In terms of flows, again, we look at the historic flows, and therefore a $2 billion flow a month looks very large. But again, look at India's savings. We save $600 billion. And even if you take $2 billion a month, it's like 4% of our savings coming into equities every year. So I think it's just I would say, the start of a cycle. At the same time, my view is that only flows will never lead to markets sustaining at levels beyond a fair valuation for a long, long period of time. They can sustain for a short period of time because of flows, but ultimately fundamentals have to catch up. And my view here would be that, yes, because of the domestic flows, the markets have become much more stable. We are not as dependent on foreign flows as we was earlier, which is good for the Indian markets and the economy. But ultimately, unless the profit growth inches up, flows only are not going to help over a period of time. And I think that is where our view is that profit growth has finally started to be seen, particularly in the June quarters. As we move forward, September quarters promises to be another exciting quarter because of the base effect. As last year, July to September had a big impact. It was the first quarter post GST. And some of the larger corporate banks which were declaring losses should also hopefully turn around as we move forward. So I think we are more positive on the market because of an impending profit growth rather than only flows. I think flows would only make the markets much more stable and less volatile.
Okay, I'm glad you said the word banks because, it's a very interesting period in the times of private sector banks. There's so many leadership changes. I mean, this morning we hear about Rana Kapoor's appointment. Of course, it has no timeline, the reappointment that is. But how do you approach it as an investor? Do you use these periods of uncertainties as a buying opportunity? Because, as someone said earlier, I mean, no individual is bigger than the organization, so things will definitely move on. Would you concur with that view?
I think an organization outlasts everyone, So I would not like to, again, comment on individual banks, but I would say that we have seen in so many institutions that, an institution which is well created in terms of procedures and, a sort of a team would eventually, obviously come out of it. Leaders do make a difference, but ultimately the organization sustains. In terms of our view on the banking sector, again, corporate banks look exciting. We have already seen a big outperformance over the last couple of months by corporate banks over their retail counterparts. And then if you look at the scenario going forward, we had metals, which were a big part of NPAs for these corporate banks, almost getting resolved because there is more than enough appetite for these kind of companies when they come out on the auction block by NCLT. We have seen some large deals on the road side, on the cement side. And now, over the last 2-3 days, there is a good news flow emerging where one power asset, there is competing bids by 2 large companies. So hopefully in the next 2-3 months, we might also have some positive news flow coming out from stretched power sector. So incremental news flow for corporate banks look to be positive, and I think that is the space which might outperform over the next couple of years.
Actually, the same 2 guys are competing for 2 power projects. Bhushan Power as well is facing competition now, of course, Prayagraj. Sunil, we are given to understand that you have to speak over there at 10 o'clock, so we are being warned that we shouldn't be keeping you too long. Thank you very much indeed for dropping by and having this very interesting chat with us.
Okay, Sunil, good luck with the conference. Thanks a lot for joining us. That's the view from Sunil Singhania. The market is now, very close to the highest point. Of course, Ashwini is still with us. Sandeep Wagle is also joined in the studios. Ashwini, incremental thoughts? Kotak is actually making a move to the high point right now. IndusInd, you reckon some of these stocks could be making a bit of a comeback?
Maybe by end of the day, because the IT index is already up 245 points. Pharma, I think, is already up 2.5%. But this is not about IT or pharma, because other than 2 sectors, everything is up. So this is about the market moving on from your macro concerns. So I have taken profits just as disclosure, and we have today made more money than the entire week. But this is looking very different. And, IT pharma obviously will outperform, but I think banks will not collapse, and this is a good time to build up positions. The shorts sooner or later will get trapped. The moment macros turn a bit, you will get your 300-500 point move on Bank Nifty. But overall, today, some movement of money has changed, and possibly, these private sector banks, they are again and again coming back. So the financials are not really responding to weak global cues. So this is an important point that people should keep on board.
Okay. Let me get other strategies going and then come back to you. Sandeep, what are your strategies?
Intraday.
Oh, sorry. Ashwini, please finish your strategies.
Strategies, I think I gave earlier.
Yeah.
But,
no, if you could reiterate, yes.
Ajanta Pharma is a buy with a stop of 1280, target of 1330. Oro Pharma is a buy with a stop of 698, target of 725. And Axis Bank is a buy with a stop of 645, target of 670.
Okay, Sandeep Wagle, what about you? Good morning. What stocks would you be looking at? By the way, before that, pharma stocks are also surging quite a bit, so don't lose sight of that. Glenmark Pharma, Divi's Labs, Torrent Pharma and Sun Pharma are all at fresh 52-week highs and are all up about 1 to 3% odd. So the Nifty Pharma Index continues to gain. Sandeep, what are you looking at?
Good morning, Sonia. I would go with a buy in a Cadila, stop loss of 396, target of 432. And a buy in a Piramal Enterprises, stop loss of 3250, target 3411.
Okay, those are some calls right now. Sandeep,
So
thanks
I've
a lot.
seen, one of the biggest gainers this month has been which? Page Industries. It's like some 20% up, last day of August.
Yes,
Ashwini, any thoughts?
Thoughts on?
Page Industries.
See, Page is for all seasons. So 2 or 3 days of downside, and again it jumps up. I think it's taken the place of Gillette. Erstwhile Gillette kept on going up, But I think Page is that sort of stock which is on its way to become MRF, because the numbers that we have, they don't seem to be going down at any time.
Right. It is for all seasons. It's for all days, actually. That is one, clearly.
Okay, got it, guys. Got it, got it.
But anyway, I just point out a couple of other names where you're seeing quite a bit of action. Wipro is seeing a bit of a move after a long time. And of course, in the broader market, Cadila and Granules are doing quite well. So these are some stocks. Ashwini, any thoughts on a stock like BEML, which is also making a bit of a comeback?